Hello, I'm Mario Toneguzzi, and this is Taking Care of Business. Joining me today is Jennifer Hunt, who is Chief Intelligence Officer for the Real Estate Wealth Lab. She's also founder of Ventures with Adventures, a vacation lifestyle program backed by real estate. Thanks, Jennifer, for joining us today.
Wonderful to be here as always, Mario. Thanks so much.
Well, I want to talk to you about inflation and real estate. And this is kind of a question that a lot of people have talked about for many, many years, decades, et cetera. But is real estate a hedge against inflation?
Yes, Mario. In fact, it is, and it's actually probably the number one hedge against inflation. Real estate throughout times and throughout centuries has proven time and time again to be the number one asset to go to during turbulent times. And inflation, as we're experiencing right now, both around the world, but especially in Canada and the US, real estate can be a really powerful way to hedge against that.
And can you explain a little bit more of how it hedges against inflation?
For sure. But first, I want to start with what's called the economists out there call it the money illusion. And just because when people think about inflation, oftentimes what I think first of all comes to our minds is, oh, well, prices are going up. And that's true, but it's actually the money illusion really showcases it a little bit differently. So while it appears as though prices are going up, what's actually happening and how inflation really works behind the scenes is that the value of the dollar, the currency, is actually going down. And why is that important? Well, it's important because it's actually based on a global perspective. So it's not just, oh, the prices of oranges are going up. It's, oh, hey, you know what? Our value, our currency to be able to buy goods, whether, from another country is actually not as, or internally within our own country is not as good. So if you wanted to buy 2 oranges, you can now only buy 1 orange. And that money illusion is a different concept, but it's an important one as we discuss this as it relates to real estate.
Okay. So, we know that prices of real estate continue to go up, right? And in some places like Vancouver and Toronto, more so than the rest of the country. But if you take a long-term look at it, not the obviously ups and downs throughout the years, but over a longer period of time, that investment has got to be one of the best investments you can make, right?
Absolutely. And over the long term, real estate has a tendency to just go up and up and up. And we're actually entering a phase of the real estate cycle formula insofar as in North America, broadly speaking, US and Canada, we will be experiencing a period of long-term stabilization into expansion, probably for a decade to come. Now, so why is that even more important right now as we're experiencing just astronomical levels of inflation? And what happens is that what we typically see is that property prices go up and appreciate over the long term. With inflation, we see that property prices go up even more. So they appreciate and inflation. So you'd get your normal sort of market appreciation, whatever that might be in various markets, but then you add on top of that whatever inflation is going on. So that is very powerful that your money is actually increasing in terms of in real estate, in that investment at a higher rate than the inflation, and that is a good hedge. In addition, and I apologize if there's a little bit of noise out in the
That's
background
okay.
there. Okay, hope you can hear me all right.
Yeah.
And in addition to that, rents also go up. And
Yeah.
so as rents rise, now, of course, we've got to deal with rent control locations. We can talk about that separately. But in addition, all things being equal, if you're not in a rent control situation, your rents will go up. You'll have maybe new tenants come in, and those go up with inflation as well. So that's 2 components as to why properties and real estate are a really good hedge against inflation. And a third one, which actually has 2 components, is your mortgage. So your mortgage, if you lock in at a flat at your interest rates and get those at a good rate and keep that for a while, your mortgage will stay the same, but the value of your real estate is going up with inflation and with appreciation. So it's going up more than ever. So in other words, you're getting a bigger spread. So your leverage is better at this time because you're sticking with the same mortgage, but your property is valuing even more. But in addition to that, a fourth component is that you're actually paying down your mortgage in a very like layman's terms way at a cheaper rate, because you're keeping it at those interest rates that you're going to be locking in for a longer term, and whatnot, and essentially your debt becomes cheaper to pay off. So that's four key ways that your real estate is a major hedge against inflation.
Well, super. And what do you think about affordability, in general out there? A lot of people talk about Vancouver and Toronto markets, but the rest of the country is pretty stable in terms of prices. Yeah, they've seen increases, but not astronomical increases. Um, is real estate like still affordable for the average person? I guess it must be, right? Because people are buying homes like crazy this year, right?
There's a couple of things. That's a big Pandora's box, but
Yeah.
let's dive into it. So first of all, when we talk about affordable housing, we want to talk about housing affordability. And there's two components to that equation. Is when you talk about affordability, it's it's not just the price, but it's also the equation of income. So we need wages to also rise, so
Yeah.
that's a part of it. But it's income and expenses. So when we think about expenses that are going on in terms of owning a home, that includes insurance, which we've seen somewhere is upwards of 400% increase. Condo fees that are also on the rise. Property taxes. Oh, some of those are being upwards of 6 to 7% last year alone in terms of increases. So
Yeah.
those all factor, and many, many more, of course, electricity and utilities, those are all on the rise. And so when we factor in all of these expenses and our incomes are not keeping up with that, that is a major consideration for affordability. This is not just affordable housing, which is important as well, but we've got to have an affordability question and conversation that's about the middle class, if you will, and above and below, everything in between, because it really is a challenge out there. Now, what was proposed by the minority government and all of the other political parties that we just had our election recently in September, all of those were proposed, those affordability promises, if you will. They were good, but when we actually look at it, and the Real Estate Wealth Lab did this actually at September meeting and on October meeting, we outlined the challenges of those promises. And we started with outlining the challenges, as I mentioned, just in terms of, we've got to talk about those insurance rates. We need to talk about condos and oversight of financials for condo boards. But in addition to that, when you actually look at the proposals by the federal government, they're all at the federal level of what they're trying to accomplish. But the majority of the platforms they've proposed are actually at a provincial level of government or even the municipal level of government. So one of the main that they all agreed on was we need more supply. And that is the number one factor for affordability. And I have a ton of stats on that. I won't bore you with them, but in the US and in Canada, we are at least a decade behind already in terms of supply.
Yeah.
So how do we increase supply? Well, certainly at the federal government level, they could induce incentives and apply incentives for building, but the majority of it is actually controlled at the municipal level with zoning. And so if the zoning isn't changed, there won't be any ability to actually increase supply. And that is the number one challenge that we're facing with the proposed recommendations.
And I would imagine because we're having these supply issues, that ongoing supply issues across the country, really, and with the demand being there, and the demand's going to rise, right? Because whenever we're through with this COVID stuff, obviously we're going to have natural population growth, but we're also going to have more immigration coming in as well. So demand's going to rise. So simple formula, right? Supply demand equals up, prices go up even more, right?
Yeah, and Mario, that's you nailed it. Absolutely. Demand, supply. Demand is definitely increasing. There's three key components that are increasing demand right now. One is a major wealth transference.
Yeah.
So from the baby boomers down to the millennials and what I call the millenzies, which are the older Gen Zs and the younger millennials, they're coming into huge buying opportunities right now. And they're the bank of mom and dad is for real and it's happening. So that's increasing demand. But we're also seeing immigration levels, they're not where they need to be and they're not where they're supposed to be because of the pandemic. But we did see 45,000 immigrants come into Canada last month. So we're starting to see the floodgates open a little bit. We'll see with the various pandemic related restrictions that are potentially coming down the pipe. But in addition, Mario, there was just another wave of demand. And that is because we just, the federal government just announced, I think there's 4 new incentives. I don't quote me on that, maybe 3 new incentives for first-time home buyers.
Wow.
So we've got even more demand based on these incentives, and the lack of supply is at epic proportions.
Yeah, exactly. Well, Jennifer, always a pleasure talking to you about real estate. Thanks for joining us.
Well, my pleasure. And definitely that number one hedge is really to get your money working faster than inflation. And real estate is a great way to do that.
All right, super. That's Jennifer Hunt, who is Chief Intelligence Officer for the Real Estate Wealth Lab and founder of Ventures with Adventures, a vacation lifestyle program backed by real estate. I'm Mario Toneguzzi. This has been Taking Care of Business. Thanks for joining us.